Crypto markets decouple from equities as investors lick their wounds after the Terra collapse. Altcoins remain heavy as risk appetite wanes and people seek the safety of Bitcoin. In the vol space, Gamma catches a bid as we start to break higher post-expiry, but Vega remains under pressure given the recent spot vol correlation. All this and more in this week's Crypto Insight. Welcome back to Crypto Insight, everyone. 31st of May. What's been going on in crypto markets? So not a great week for crypto last week, considering equities were up around 6%. If you look at the S&P, which vol adjusted, you should have assumed that Bitcoin would be up 10 to 15%, and it was pretty much flat last week, right, until the weekend. So that decoupling and that breakdown in the short-term correlation, that could be put down to a few things. Okay, you had month-end buying flows hitting the stock market, which obviously didn't hit the crypto market. You had continuing de-risking from crypto, particularly in altcoins after the whole Terra Luna debacle. Fallout of that is still kind of ongoing. People are de-risking. People are kind of switching to the more safe part of the spectrum, which is kind of Bitcoin. Hence, Bitcoin dominance has been rising. And then you also had a big expiry in crypto. You had the May options expiry on Friday, which arguably may have kept a bit of a lid on that market because we did start to see a bit more movement after that expiry had gone away. Okay, so whatever it was, obviously holding crypto down. Bitcoin dominance, like we said, creeping higher, now around 46% relative to 39% at the start of the year. Crypto investors obviously seeking refuge in the safety that they perceive in Bitcoin relative to everything else. And it's got more staying power, right? If you look back at past cycles in crypto, the top 10 crypto assets keep changing, but Bitcoin and Ethereum don't change. They just stay up there, right? As 1 and 2. So there's more safety there that those aren't going to disappear, basically, right? Now, if we look at the technical side of things, obviously I've been looking for a fourth wave pop to a minimum target of 33K. That's what I was looking for to happen in line with an equity rally. Obviously, we didn't quite get. We're almost there now, to be fair, right? Over the weekend, we've gone from 29 to 32. So we're quite close to that little first target of mine. It may extend, right? If equities extends, I suspect the correlation comes back a bit and this will extend. I don't see it really getting above 37, 38. That would be a real push. Depends what news comes out, obviously, but just all things being equal, I don't really see it. And then the next down leg will probably take place. And like I say, my target is kind of around that 20K area on the downside, basically, right? So, I would personally, I've got some hedges on, not fully hedged. If we were to get in that region between 33 and 38, I'll be putting on more hedges to be very ready for that move down, basically, right? Okay. So that was the story of sort of Bitcoin decoupling and crypto decoupling. If we then look at ETH's been struggling. Right, there's no two ways about it. It had obviously been outperforming. People have been buying into the merge narrative, but the price action is looking pretty ugly, right? It's basically showing you that people are trapped in that position and they're kind of being forced out of it, right? That's what it looks like. Now we retested that support at 1700. We have got a bullish divergence with the momentum indicator, so that's a positive sign potentially. Okay, but you look at the spread. ETH Bitcoin broke below quite a key support at 0.064, kind of held the next one there around 5.9. I see a big one down there at 5.5 and an even bigger one down at 0.048, right? Who knows if it's going to be tested, but the reality is because we think Bitcoin ultimately doesn't bottom until around 20K, if that happens, where could I realistically see ETH getting to? 1,000 is not out of the question, right? Bitcoin at 20K, ETH at 1,000, that takes this cross rate down to 0.05. I don't see why that's not doable, basically, right? So that's the sort of context for, what you need to kind of be open-minded about the type of moves that we could still see And that's talking about a 50% drop from here in Ethereum, basically, right? It's not out of the question, right? So don't be overly alarmed if that was to happen. Yeah. And then alts are obviously still heavy. I bring up alts here. So, Bitcoin, obviously we had a little bit of a pop over the weekend. So Bitcoin is up 6% now on the week because we had that big move sort of on Monday. But you look at that, AVAX and Solana are still down 15 and 10%. So even after a recovery, AVAX was down 30% at the lows last week, right? Getting crushed. Solana was down 20%. So, they're still heavily under pressure because they're further out on the risk spectrum in crypto, and people are just like, get me the hell out, basically, right? So, personally, I see it as a nice opportunity for those of us like myself who have been pretty light in altcoins. Like, I haven't really dabbled in any meaningful size in altcoins the whole time, right? I've just stuck to Bitcoin and Ethereum. So, and I started that in 2020. So I'm actually looking at this and saying, okay, now that we're getting some nice dips, and Solana that was trading above $200 is now trading at 40 or something, I don't mind selling a few cheeky puts and get delivered on small clips of Solana and start to accumulate, right? When I first got into Bitcoin and Ethereum, it was the same mentality. It was like, I'm willing to accumulate X amount. I'll do it slowly. I'll do it over the course of 3 to 6 months. And once I'm in, I'm going to leave it, right? So now I can kind of do a similar thing with some of these altcoins that I think aren't going to go to zero and disappear like Solana. And the way I can do it is they've got liquid options markets now. I can just launch a few puts, struck 10, 20% out of the money in a month. And they either go down and deliver me some Solana at an okay level, or they just make me a bit of premium, basically, right? So that's kind of how I'm trading it right now in those alts, doing it in very controlled size. Like I said, these things could go another 50 to 70% lower, right? There's no doubt about it. They could. So just size it in a way where if that was to happen and you got delivered down 20%, you don't mind, right? It's money that you can afford to park in there for the long term. Yeah. And that's certainly the way I'm approaching it. Yeah. Let Aaron do the on-chain metrics.
I hope everyone had a good weekend and a good long weekend for those who are in the US for their Memorial Day. So for this week for Glassnode on-chain, the general theme for Glassnode's newsletter this week was basically that it seems to them that only the hodlers remain, as they put it. And so starting off with this chart in the top left, this is kind of showing that the active addresses and entities in Bitcoin, which an entity they consider is kind of collection of addresses, what you would expect to be something like an exchange. It's really stagnated and kind of trended sideways since September 2021, which they put in line as happening in other bear markets. And so moving on from there, using this accumulation trend chart that we can see on the right here, sorry about that, that we've featured a few times, we could see that there's two groups that have been doing most of the accumulating in this recent sell-off from Luna. You have the accounts that have more than 10,000 Bitcoin and accounts that have under 100 Bitcoin, having that deep blue and a little lighter blue, showing that a lot of accumulation going, and then in the middle, just a lot of neutrality, and basically showing that, you know, there is accumulation going, but the middle cohorts are kind of sitting, not doing much right now. And an interesting note is that this under 100 Bitcoin cohort seemed to have soaked up about 80,724 Bitcoin, which is right along the lines of that 80,000 coins that were sold by the Luna Foundation Guard on that Luna UST sell-off. From there, moving to the bottom left, we have looking at our HODL waves chart again, which I believe we featured last week, but this time kind of looking at the short end instead of the long end. And we could see that coins that have been moved in the last 3 months has just been in a serious downtrend. And Glassnode points this to as these coins are just migrating to more long-term holders that appear to be price insensitive. And they also pointed to that it seems that those that bought in the recent all-time highs this past November, they seem to be content with sitting on their coins right now, at least until the price gets back up to where they may feel a little more like they've kind of getting closer to break even. And then lastly, in the bottom right-hand corner, we have these long-term holders kind of showing that we recently kind of had a bit of a dip coming off this Luna sell-off, where roughly 77,000 coins were put back into the market by long-term holders. And right now you'd be classified as a long-term holder if you bought at the end of this December 2021. But since that sell-off, we've seen this start to creep right back up, hitting previous all-time highs. And Glassnode points out that they feel this kind of shows that you might be able to expect this trend to continue for the next 3 or 4 months, and that it's just more sign that, you know, the hodlers are the only ones that remain, soaking up all these coins hitting the market, and that new participants currently are not entering into the Bitcoin atmosphere. Moving on from there, we're going to Will Clement. And so, you know, Will Clement in his newsletter this week, he mentioned that he actually apologized for not putting out anything too new, as things have been staying the same. So rather than featuring charts we've already spoken about or what Glassnode pointed out, I figured we would touch on some things that maybe we don't speak about super often, and that is crypto exposed equities, you know, things like MSTR and miners and things of that nature. So starting out with MicroStrategy, we saw a really big reversal last week where we opened up on Thursday, I believe it was, you know, we gapped down, and then by the end of the day, we had closed up 9% and out of this short-term downtrend that we had seen. And that was kind of followed up by, you know, MSTR, Bitcoin, the underlying, Silvergate, CleanSpark, and Iris Energy, which are mostly miners. They also had lows on Thursday that were significantly higher than the lows set on the 12th of May, where you had this kind of big puke down, which is kind of seen as maybe a little bit of a sign of some strength going into these. Whereas on the other side of that, you had Riot Blockchain, Hut8 Mining, Hive Blockchain Technologies, and Bitfarms all having lower lows than what was seen on this kind of 12th of May. And then we have this chart down here, which I thought was a pretty interesting chart that was featured by Will Clement, basically just showing you a group of crypto exposed equities and then showing you how they perform relatively. You know, how does the individual perform against the group? How do they perform against BTC? And then how do they perform against the Bitcoin mining ETF, WGMI? And so you could go through that. But one thing you do want to keep in mind is that any sort of recent positive performance might want to be taken with a bit of a grain of salt and some skepticism, as there seems to be a lot of overhead supply from these buyers who are waiting to unload at prices closer to their break even, as these crypto exposed equities have been in months and months of red. And that is going to wrap up for today's crypto on-chain.
Thanks, mate. Yeah, on that note, I mean, some of these miners have, yeah, they've got leverage, right? They've levered themselves. They've borrowed money to expand their mining operations. And now the amount of money that they make has gone down a lot, right? You look at I think they call it the hash price or whatever, right? But how much they make for mining Bitcoin has gone down considerably, as the price is down like 60% from the highs, right? So, and the money that they borrowed to fund those operations is still the same. Right.
Yeah.
So
hash rates are at an all-time high, right? Where the difficulty to win the reward is at an all-time high.
Difficulties are high. Yeah.
Well, the reward is at an all-time, almost at an all-time low.
The dollar value of the reward is at a low.
Right.
Yeah. Exactly.
So these miners are, you know, you have the ones that are maybe not as well positioned. You know, they might be liquidated, or you might see them kind of disappear a little bit, and only the strong might remain. Yeah.
Yes. I think that's the thing, you know, in crypto, you've just got to make sure you do it in a controlled way. A lot of people are going to go pop, right? Whether it's a coin or whether it's a miner, they're going to go pop, but there's going to be some recovery at some point later down the line when the Fed decides to turn the taps on again and can get away with it. And then these things are going to rise from the ashes, right? And you want to be able to identify the ones that are in the best position to rise and get in on them, because there'll be like some stupid like 5x returns in no time available, I would have thought, right?
Yeah. Real quick, one other interesting note in this same topic is that you're seeing that the energy prices are affecting a lot of these Bitcoin miners, right? A lot of them, in terms of their bottom line, they rely on cheap energy. And so when you have oil and all these things hitting all-time highs, miners that opened up a month, 3 months, beginning of the year, you know, their pro formas aren't looking nearly as well, because a lot of them did not, you know, they didn't bake in $120, $150 oil. So you're seeing maybe some their numbers aren't looking as promising. So it's kind of a bit of a shuffle right now in the Bitcoin miner sphere.
Cool. Okay, great. All right, let me move on to the vol stuff. Yeah. So on the vol side of things, what's realized vol been up to? Well, as we said, you know, before the little pop that we had over the weekend or on Monday, realized had been pretty subdued on Bitcoin, running at around 55%. whilst implieds obviously have caught a little bit of a bid on that pop on Monday. So that takes the implied realized in Bitcoin to about 15 points implied over. You look over at Ethereum, realized held up better there. We were getting much wilder swings as Ethereum was under pressure and testing that 1700 area. So realized kind of trickling back up there to around 80%. And that actually happens to be above implied because although implieds had a pop, they kind of got crushed in later into the week because of the DOV selling, right? And we know there's roughly a 4-to-1 ratio in the amount of DOVs that get sold, the amount of gamma that gets sold or volume that goes up in Ethereum relative to Bitcoin, because the DOVs that are Ethereum based or on altcoins, the market makers will be selling Ethereum gamma against that rather than Bitcoin because of where the relative vols are. Yeah. But anyway, bottom line, Ethereum gamma continues to be better value despite being on a higher volatility, right? So when you're trying to ascertain the value of volatility and what options you should be buying, it's not as simple as saying, well, these are a cheaper vol, so I'm going to buy them. You got to look, how is it compared to realized? And clearly Ethereum is much better value gamma, even though the implied trades, nearly 10 vols higher, basically. Yeah. Okay, so that's the realized. The next chart to look at is term structure of vol. So you can see here, the term structures are kind of moved in a similar way, right? Ethereum, Bitcoin's the top charts, Ethereum's the bottom. So you've had the front end catch a bit of a bid. Like I said, gamma's caught a bit of a bid, right? So when we say gamma, we're literally talking about less than 1 week expiry stuff has gone up. And then everything else is down. So you see that the Vega part of the curve, so anything 1 month and out to 12 month or whatever, is quite a bit down. It's down about 5-6 vol points in Bitcoin, and sort of, around 3 to 4 vol points in Ethereum. And so what we're seeing there is as the market's bouncing from those lows, you're getting Vega come under pressure, but because the move has been quite big in terms of the bounce, people don't want to crush the front end, right? Because the front end is actually, the gamma is actually realizing. So that's where you see this Vega coming down and this gamma going up. Now you can see, if you look at the kind of path that it kind of took, you can see really the acceleration of vol to the downside has all really, it was drifting throughout the week, but really accelerated on that move over the weekend, right? As spot broke higher, you saw that shift down in all those lines, except for the pink line, which is the front end, the 1 week stuff, that shot up, all those other lines shot down. That was the Vega coming lower and the gamma going bit. So it all kind of happened around just over the weekend. Yeah. And that spot vol correlation where we're seeing spot up and vol down, that's consistent with the idea that put skew is the thing that trades at a premium, right? So when people are willing to pay for puts and sell calls from a vol perspective, it's because they anticipate in a rally, vol goes down, and in a sell-off, vol goes up. And that's exactly what we have seen. So it's kind of validating or vindicating that put skew to show you, yes, that is the dynamic in the crypto options market at the moment, right? That is the way that spot and vol are correlated. Okay. If we then have a look at the skew side of things, you can see here, skew obviously had got to quite extreme levels. Even as the market was selling off late last week and crypto was kind of at the lower end of the range, you had put skew close to 20 vols, 15 to 20 vols in the 1 week to 1 month area on Bitcoin, and slightly higher in Ethereum. Now, as we've broken back higher, you can see all of that skew has moved back a bit, right? So you're now looking at more like 10 vol points for puts across the space, across maturities in Bitcoin. And then if you look at Ethereum, we've got a bit more dispersion there. We've got short dated stuff, at around 14 vols, the 1 month stuff. So still a bit more premium for puts on Ethereum than there is for Bitcoin. But then if you look at the 6 month stuff, those puts trade only 5 or 6 vols over. So what that's telling you is that there's a bit of a difference in the way people perceive Ethereum, where they are nervous about the downside in the very short term, but on the longer term, they're more interested in the upside, which is giving the calls a bit of a bid, and that's bringing that skew back down to a more normal level, basically, right? So that's kind of the difference we're seeing in the kind of skew surfaces between Bitcoin and Ethereum. Yeah. If we then have a look at flows, so Bitcoin flows, it was generally quite a quiet week. right? In terms of flows, if you look at the kind of notional traded, it was on the lower end of things. So you can see here on the block snip, I've highlighted a few things. Yeah, so we had post expiry, we had a load of call buying in the very, very short end of the curves. You had 3rd of June, 10th of June, people piling into the 31,000 and 32,000 strikes. So those are the ones that are now at the money, basically, right? So the people piling into those when we were down at 29,000. So that's been okay as a trade. Those things expire this Friday and next Friday. So that person's probably going to be exiting and taking profit on those pretty soon. Then you had later in the day on Friday, you had a large protection buyer in June. This was the end of June expiry, around the 28K, spending a chunk, right? Spending about $2 million of premium as protection. So clearly, you know, still nervous there that this thing's got more downside with the whole bearish macro narrative and using June options to protect that. Personally, given the levels of skew, and the fact that front end vol was, you know, not realizing, and I think that's quite a punchy trade to be using that as your protection. I'd be more inclined to use put spreads, put ratio type structures, risk reversals, things like that. Speaking of risk reversals, about a week ago, we did have a risk reversal trade there in September. Someone doing the 20K puts against the 45K calls as a September risk reversal. In my view, that's a much better hedge. If you're looking for a macro hedge against your crypto, that's a much better hedge than just buying a load of June 28 puts, basically. All right, I think that's a much more sensible hedge that's likely going to cost you a lot less money. Yeah. Anyway, so that's the summary of. Oh, and then the last point is after the weekend pop, we had some kind of continuation buying of June upside, targeting that 38K, 40K area in June calls, which look reasonable value given where the skew is and where the vol is. So someone piling into those to get some more leverage to that rally, thinking that we might have some room to run in. And if we do break that 33K resistance area that I'm talking about, maybe we have got legs to run a little bit, right? So that those could end up working quite well, those June calls, right? Speaking of those June calls, I may as well, whilst I've got the opportunity, just kind of bring up my trade spreadsheet. Where are we? So for those of you who kind of follow my top trades, you will know what I'm getting up to in those. So when the curve went super inverted, obviously we put on some May June call calendars, ratio call calendars. You know, they were basically, the idea of those was a very low risk way, low premium, low risk way to participate in a rally, basically. Okay, and that's kind of exactly what they've done, right? So we did those on the 11th of May. We did the 42 calls in June against the 38 calls in May, selling double the amount of the 38 calls, such that we only ended up spending $20 on the structure. Those May calls have ended up expiring worthless. So now with the market up here, looking at those June calls, they're worth about $150 right now. So, I mean, from a percentage return, it looks ridiculous, like 650%. But the reality is, like, it was close to zero cost to give you a bit of a free option in case the market can rally by June, because we didn't think the market was going to be able to rally that hard by May expiry. So if we get 1 or 2 weeks of actual decent price action out of equities and crypto, these things could easily travel back towards maybe even $500, at which point I'll probably take my money and run, right? So that was the idea there. But like I said, it was more of thinking of it like a free option. The curve went crazy inverted. How can I get myself a free option on a rally? And that's kind of how this thing has played out so far. Okay. Right. Next thing, or last thing to talk about would be Ethereum flows, right? So on the Ethereum side of things, a bit more lopsided towards call options again, similar to what we have been seeing in recent weeks, right? Ethereum flows a bit more dominated by calls. Now, the reason they're dominated by calls is because we're looking at it in terms of contracts, right? And the structure that seems to be in fashion on Ethereum right now is these digital call spreads, right? These really tight call spreads, 500 points wide, way out of the money. They were trading in December, they were trading in March. Now they're even trading in September, right? Because the merge timing, there was that developer meeting on Ethereum merge. Timing is, they're still going for August. Wouldn't be surprised if it gets delayed 2 months still, but they're going for August for the merge. People are saying, okay, maybe Ethereum could double by September. I mean, that's pretty punchy if you ask me, given the macro backdrop, but you never know. But if it can double, you're going to get to 4,000 on Ethereum. And the kind of payouts you're getting there are 25 to 1, basically, right? You're buying 500 point wide spreads for a cost of like $20, basically, right? So they're pretty good in terms of the leverage. Optics look great. You know, they'll be hard to monetize if you get a quick pop and then a drop again. They'll be hard to monetize, but yeah, they don't seem like the worst trade in the world for people who are uber bullish on the merge and its repercussions, basically, right? So that's kind of the predominant flow we're seeing in ETH. On the downside, we are still seeing, like we said, put skew still quite firm in the front end. That's because you're seeing protection buying. You're seeing, we saw 3rd of June downside. We saw 24th of June downside in the range of 1,700 to 1,400 strike puts. Like I said, don't be surprised if this thing gets as low as 1,000. That's why people are buying those sort of June options, basically, right? Because they're aware of that risk and they want to neutralize that risk. And actually, if you look at it from a pure premium perspective, the cost of those June puts isn't crazy if you think there is a chance we could get as low as 1,000, basically, right? So they're kind of giving people a bit of room to sleep at night and a bit of crash protection in the book, basically, right? Okay, so that's kind of my summary on crypto. I think we covered all the points. Over to you guys. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.